Hello, this is IGTV. I'm Angeline Ong, and this is your look ahead to the week starting the 13th of March 2023. We'll be joined by IG's Josh Mahoney in a second, but let's get you across what to look out for, the key trading points next week and opportunities. Start in Australia, where we've got consumer confidence numbers and also business confidence numbers from the United Kingdom. Unemployment numbers might give us an in point there. And also consumer price numbers from the US and the API crude oil inventory data out on Tuesday. Oil fell a fourth session on Friday, heading for its biggest weekly loss in 5 weeks due to worries about the prospect of steeper interest rate hikes from the US. Then we also have from Japan, the Bank of Japan minutes. That's quite crucial given that it's just had its last meeting with Kuroda. And Chinese retail sales and industrial production. For more on Chinese data and what it means for the China reopening play, have a look at my show on the IG platform about China rise or sag. And also on Wednesday, we've got the spring budget from the United Kingdom, along with the retail sales number from the US and producer prices as well, along with the EIA crude oil inventory report. Now, moving on to the latter half of the week, we've got trade balance numbers from Japan, unemployment data from Australia, house price numbers from China, and of course, that ECB interest rate decision from the Eurozone. Also looking out for housing starts and initial jobless claims from the United States. Then we end the week with the Eurozone, rather. That's the trade balance figures that we're looking out for, and industrial production and the Michigan Consumer Sentiment Indicator and the Baker Hughes oil count. For more on all that, let's turn to Josh Mahoney now. Josh, what is on your radar? What are the key endpoints if you're looking from a technical perspective?
Hi, I would say that, in what is a relatively busy week on the economic front, the number one thing that we're going to be looking out for is that US inflation print. Ultimately, the big fear that we've been having recently is that inflation has stalled in its downward trajectory. By and large, in the mid sixes, US inflation hasn't managed to continue that initial decline. That does throw up question marks around other areas that are a little bit behind it. Of course, the Eurozone, we've now started to see the likes of France and Spain similarly flatlining around the 6% mark. And so it really raises also questions around the UK. We're going to see a similar kind of thing, that these countries can take the top end off that most volatile element of inflation, but those sticky elements just remain elevated. And so that's going to be the key one. Crucially, markets are expecting to see a decent decline, actually. If we look at the expectations for US CPI, 6% is forecast from 6.4. So hoping to get back on that trajectory and maybe pick up a little bit of steam in terms of that downside move. Notably, the jobs report out of the US did come out with a 0.2% month-on-month reading. That is a strong vote in confidence of further downside because we need to see those wages come down in terms of how quickly they're rising. So certainly this is going to be the big mover, and that I think is going to be impacting the markets in terms of stocks quite heavily here. This is the Dow Jones Industrial Average, an important one because we've seen this double top formation. So this is a market that really is at risk of further downside. Bear in mind that markets have by and large taken the US jobs report as a positive. Like I said, for me, it's all about that month-on-month wage number. But certainly we're going to be looking out for this one, because if we see a significant downside move in terms of that inflation figure, 6% forecast, if we get 6% or below, I think we're likely to see a nice pop towards the upside for stocks. But if we saw, say, a 6.4, a 6.3, number above 6.4, for me, that would be a big bad news story. I think we'd swiftly see this market turning towards the downside once again, and in which case this rebound we're seeing at the back end of this week looked like a potential selling opportunity building on that double top formation. Elsewhere this week, we're going to see a big focus on the UK. We have UK jobs numbers coming out later on in the week. So well, it's the beginning of the week for the UK jobs numbers. So crucially, when we're talking about sort of inflation and the like, it comes back into play with the UK job numbers, and that's on Tuesday. Average earnings expected to come in at 5.7. That's down from 5.9. So a downward trajectory in terms of those average earnings. That's going to be a key element. And certainly if we look back to the US jobs report, for me, the focus was on wages. And so, again, I think the focus is going to be on wages. And at the moment, markets are predicting a move towards the downside in terms of that figure. We've also got the UK budget coming out later on in the week as well. So I've got cable up here. We can see that cable's actually been moving towards the upside. And in part, that's because we've been seeing some signs of potential strength here in the UK, with the latest GDP number coming above expectations and the year-on-year figure coming in flat. So those calls from the Bank of England and the IMF and the like, that we're going to see 2023 dominated by negative growth in the UK. Well, at the moment, we're seeing potential signs that that might not necessarily be happening. So you can also construe those jobs numbers from that perspective as well. If we see unemployment remaining low and the like, then that could be good for the pound. Here is the daily time frame, and as we can see, we've got that descending trend line, and we've popped into that trend line and now starting to weaken a little bit from here. So certainly, if we're looking at this currency pair, we're going to want to see a 120.65 taken out for us to then look for further upside. Until then, we do have this bearish trajectory, so we could see the US dollar come back into a little bit of strength. And finally, we have the ECB rate decision. Markets expecting a 50 basis point hike. That means that by and large, that 50 basis points is priced in by the markets. And so what else are we looking out for? Well, bear in mind that we have been seeing record highs in terms of the core inflation reading over in the Eurozone. And so there are some significant concerns. Is that going to lead them to essentially say that they're going to do another 50 basis points next time? How far do they need to go to be able to ensure that inflation is driven lower? So the outlook for further interest rate hikes is going to be the key element within this reading. This is really playing out at the moment in terms of euro dollar, with price rebounding from support at 105.33. The bearish trajectory that we have been seeing of late does come into question if we break through the 106.94. But until that happens, much like with cable, there is still a chance that we do see this market roll over. But what we're seeing here in terms of the initial reaction to the US jobs report is people are taking it positively. That means dollar weakness. It means equity market strength. And as long as people continue to feel positive in that same way, then we could see that breakthrough 106.94 to provide us with that bullish outlook for the week ahead. And the fact that that would have provided us with a double bottom formation above this 104.83 mark does actually signal the continuation of this wider bullish trend. But that's only if we do break that 106.94 mark.
Josh, that's really fascinating, because every cross as well depends on what the Fed and the US dollar does. And I can tell you that the equity markets are taking that jobs number in their stride as well, because futures in the countdown to the Wall Street Open, well, they're turning positive as that payrolls data is easing those rate hike fears. Now, turning to the company news as well, it's going to be a really busy week, starting with Monday, when we have Direct Line Insurance out with its full-year earnings, and Porsche as well with its full-year numbers. Porsche, not the only car maker that is out with earnings. I believe we have Volkswagen as well. Let's see what we've got on the menu on Tuesday. Close Brothers, Old Mutual, and as I mentioned, full-year earnings from Volkswagen. And turning to the latter half of the week, on Wednesday, we've got full-year numbers from Prudential, Balfour Beatty, Hennes and Maritz, and also first quarter numbers from Adobe. And on Thursday, look out for a bit of a consumer-linked day there. We've got numbers from Deliveroo, Savills, that's the housing-linked estate agent, Rentokil, Initial, and also Dollar General Q4 earnings. They're the ones behind the dollar store. On Friday, we've got some respite there. So, Josh, what can you tell us about Volkswagen?
Yeah, I mean, this is one of the two that I wanted to bring up for you guys. Certainly, I think this is a notable one because on one side, we're seeing this reopening play in terms of China, people feeling more positive about demand coming from this huge market. But on the other side, we're seeing this focus around what feels like it should be relatively aside from this, which is the Silicon Valley Bank and the crisis that's happening over in the US. Well, it may be a relatively niche bank focused on Silicon Valley tech stocks. But this does point towards potential wider contagion within the banking industry. And of course, the likes of Volkswagen, the likes of the automotive industry as a whole is highly reliant on finance. So certainly we don't necessarily want to see weakness in terms of the banking sector, and it's certainly not necessarily good news for this industry. We are seeing Volkswagen heading sharply lower as we close out the week, moving into your 17217 support level. That was the peak here from the 15th of November. But as things stand, we still do have that sort of bullish trajectory that's been playing out of late. So we can look out for a potential area of support between 166.71 and 170.11, alongside that 172. This area looks like a potential buying zone. Of course, we do have earnings uncertainty. So it really comes down to exactly how these earnings come out and what they're really telling us. But coming into, or as we are within a year that we are looking for the potential for economic difficulties, uncertainties. We've just seen a rise in terms of unemployment over in the US. How much do people focus on China and what that's going to do for the industry, and how much do people focus on the potential for weakness within consumer spending habits? Talking of consumer spending habits, I also wanted to quickly bring up Deliveroo. We're essentially looking at a stock that really has been hit hard over the course of 2022 thus far, but now we're looking at base being formed. You can see by and large over the last, say, 6 to 8 months, this stock has been really range bound between your sort of 77 up to your 102 mark. And so we're halfway within that. I'd expect to see, all things remaining equal, more of the same really in terms of this rebound back towards resistance. The 4-hour chart shows exactly that. And we've got the same kind of thing on the hourly time frame. So this nice bullish trend coming into play at the moment. But of course, really, we need to see exactly how these earnings come out and exactly what they do in terms of expectations. But as things stand, we look likely to continue to trade within this range. It, for all intents and purposes, does look like a potential base following a massive sell-off. So if we're looking for the exit, it would probably be towards the upside, but we haven't seen that happen at the moment. So for me, the key is always expect what's happening to be continuing until it tells you otherwise. We're expecting more of the same. That means a rebound back towards the top end of this range before we potentially come into trouble once again for Deliveroo.
Thanks very much for that. And certainly the sector is very exciting, especially with not just Deliveroo, but other players such as HelloFresh also giving disappointing outlooks, especially as they transition out of the lockdown and COVID period. So that's our wrap up of the week ahead with IG's Josh Maloney. And whatever you're doing, hope it's profitable.